When I was 30, the world was more hospitable than it is for today's 30-year-old. There is a mirage that if you learn about investment, you will be a good investor. The S&P 500 this year had generated like 26% or something, and the returns this year, the average investor achieved something like 9.8% return. That is absolutely depressing. So it's not just about understanding how to invest. It's about a mental discipline that you have to undertake. And there is no more difficult thing in the world to be able to steel yourself for than to invest in something like Bitcoin.
Hey there, I'd love to get your input on something. I'm exploring the idea of creating an online community for Bitcoiners who see Bitcoin as more than just an investment or a savings technology. Those who understand that it's a change agent for growth, both personally and for our societies. So, in this early research phase, I'd love to hear from you. If you could take 5 minutes and go to bitcoinformillennials.com/survey and let me know what you think about what you would like to see in a community like that, then you can help me create a place that fosters personal growth, long-term thinking, connection, and education. So please, if you want to help, go to bitcoinformillennials.com/survey and let me know your thoughts. Thank you so much. Now let's dive into this episode. All right, Tad Smith, welcome to Bitcoin for Millennials.
Bram, thank you very much. It's good to be here.
Thank you so much for coming on. I just shared with you off mic. I discovered you on another episode or another podcast, Tim Kotzman's podcast. Absolutely loved the conversation that you two had. Yeah, that's when I reached out. So I appreciate your time, and I think you had a nice idea for this conversation, sharing all the mistakes a Gen Xer made that millennials can learn from, and then of course the topics are money, investing, etc. And no investment advice. Maybe we have to share that up front.
Before we turn to that, actually, Bram, if you think back to that podcast with Tim Kotzman, there was an element in there that got a little viral, which was my talking about how if you earn 10%, basically you're not making any progress against the money printer. And that sent some people on crypto Twitter into absolute paroxysms. And it's very interesting to me because more recently I circulated something which was actually from Raoul Pal and Julian Battel that got to exactly the same number. Literally the same math that I did that sent everybody into absolute hysterics. They came to exactly the same number. And I thought, and by the way, they did a very rigorous analysis and went through all of it. And so interestingly, I don't think, even though what I said then in that podcast sent some people into a frenzy, other people thought it was a grasp of the obvious, but sent some people into a frenzy, had much changed, which is that fundamentally monetary inflation is something we all need to think about. And that's a good framing event for this because I learned that late in life.
Yeah, that's exactly one of the points that I found very interesting. I mean, you have spent your life or a part of your working life as the CEO of Sotheby's.
Teaching finance for 20 years, strategy, finance, or technology, media, entertainment at NYU Stern. And by the way, I had people in my comments saying, well, you must be the dumbest finance professor in the whole world. I mean, you wouldn't believe it was, and guess what? You can actually live and breathe traditional finance your whole life and be very successful in it and not realize that.
Maybe you know him, Richard Byworth. You know who that is?
He is, by the way, there are two sensational podcasts of him, and maybe a third that I don't know about. There are at least two that are floating around just in the last 6 weeks of him describing the underlying convertible debt market for MicroStrategy. And they are, for anyone who's even thinking about wanting to understand MicroStrategy, is a must watch.
Yeah. So he tells me, most people in traditional finance have no clue about finance, so that's what I had to think of when you just said this.
Yeah, well, at the end of the next hour or so, you can make your own judgment. How's that?
Yeah. No, but I think the humility that you share here, I think, is also part to a degree of the Bitcoin journey. I would argue, but I think what you're sharing, like people that hear that and they are from the crypto community and they're like, oh, you're wrong or whatever, like. There's still many people that are in crypto that see it as like a get rich quick or, I'm going to be an investor in the new way, blah, blah. But they don't really understand why they are doing it or why they need to do it. And I think that is, well, they call that a red pill kind of moment, right? Like, okay, it's not a nice realization to realize that, if you're making between 10% returns with, whatever investments you do, then you're probably flat. Like you're just compensating for the debasement of your money. And, a lot of people are running really fast every day. They're on this hamster wheel of whatever they do. But yeah, you need to realize what you were up against. And maybe that's a good intro into the first question I wanted to ask you, because, this podcast is called Bitcoin for Millennials. I started this because, saving is not possible anymore. You have to become an investor. You have to do more than like 10% a year in returns to just compensate for inflation, basically not get poorer. But that's totally different than what's been sold to us, basically, right? Like, okay, you go to school and, you get a degree, you get a job and you save, and then you get a house, and then at one point you sell that home because it went up in value, and then you buy another home, etc. Like that path, right? But that doesn't really exist anymore. And I wanted to ask you, of course, you are a bit older, of a different generation. What was your idea of your path? Like, did that feel realistic to you?
So, first of all, I'm Gen X. I'm 59. I'm actually the first of Gen Xers. The crowd right 1 year older than I am is the last boomer crowd. So I don't know whether you call me an honorary boomer or not. You can take your pick. Exactly.
You're on the edge.
Yeah, right on the edge. I'm close enough. I know a boomer when I see one. So, interestingly, when I started out, first of all, I grew up in Denver, lived with my mom, didn't have any money, had no way to finance my education, for a variety of reasons that are sort of technical to get into. But bottom line, I went to the Ivy League in college. And because I did not qualify for financial aid, but also didn't have the money to go, that's, as I said, a long story for another time, I had to basically borrow it almost entirely. And my mom borrowed it and I borrowed it. I ran a huge credit card bills and everything. So first note is, wow, I got into one of the greatest colleges in the world, and I borrowed an insane amount of money, 1983, to be able to go from 1983 to 1987. And so that was almost a leveraged buyout on my professional career. That was in the 80s. And the question is, would I do that again if I had the chance today? Short answer, no, I wouldn't. And there are a whole variety of reasons. But one key reason is that the opportunity cost of the funds that I borrowed has soared in value, because what I could have done, number one, and number two, the value of the earnings stream from that elite education, in my view, over the next sort of decades will decline in relative value. Yeah. Number one, I wouldn't do that. Then I went to work actually on Wall Street, and that was an interesting time because I literally was in the training program in 1987 when the market crashed in October, the famous 1987 crash. I'll never forget coming back to the training program. We'd been out, doing some team exercise out in the woods in New Jersey doing it. And there was this long queue at what was called a payphone. And we couldn't figure out what was the queue. And it was everybody trying to figure out what happened with the market. The market crashed. And I actually think that the understanding of finance, and also accounting, which really began for me there on Wall Street, is something that I think I would do again, but I would do differently. Because one thing that they didn't really teach there, and frankly, I went on to business school, which we'll come to in just a minute, is what money is. And the irony is, most of traditional finance didn't really, to me, give me a real deep understanding of money. What they give you is a very good understanding of banking. They give you understanding of how money is created. In fact, they tell you that money is created by the Fed and by banks every time they issue loans, all that stuff. And you can have a really thorough grounding in fractional banking. But to understand money in the sense that we talk about it when we think about Bitcoin or gold or other sort of stores of value is a very different kind of thing. So the next thing I would say is I then borrowed what I think in 1990 terms was $96,000 to go to Harvard Business School. And by the way, I had just been at Princeton 3 years earlier. And so this is not just, and by the way, don't think for a minute that I paid off Princeton. I'm still like paying 21% interest or something, like struggling to stay ahead of it. This time, however, for different reasons, the business school at the time then was willing to lend to me because they assessed me. College didn't do this, but business school had a different view, which is that they were willing to lend to their people because they had a long-term perspective that those individuals would be able to pay it back. And so I borrowed literally $96,000 on top of what I already owed to college. The result there was when I, both in the summers and coming out, I had to work, and I had to work hard because I had interest to service. And the question here is, would I do that again?
How old were you then?
So in 1990, I joined, so I would have been 25, and I graduated in 92, so 27. So from 25 to 27. And the answer to that is no, for the same reasons that college was no, which is to say, and by the way, notice what I just said. By the way, I give money to Harvard Business School. I'm a huge fan of Harvard Business School. I'm a big fan of my college. I enjoyed both experiences, but the world is a little different today, which is, again, the opportunity cost of those things has gone up and the earnings perspective has gone down. Crucially, however, I would say that today things are very different, which is one should go to school not because you have a forecast and earnings and getting ahead over the next X decades. It's because you actually want to learn what they're teaching. Think about how strange that sounds. Now, to a Gen Xer or to a boomer or something, that's unheard of. What you'd want to do is it's a giant sorting process for the labor market. But today, I think the value of the education is paramount. And so you have to think about, is that education so much greater there that it's worth all the extra money that you pay today? And the answer to that could well be no.
Bitcoin custody is evolving. And while self-custody is important, it has its own risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your custody setup. OnRamp secures your Bitcoin in a segregated cold storage multi-signature vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, OnRamp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Check out onrampbitcoin.com through the link below and schedule a consultation with the OnRamp team to get to know them and learn more about their offering.
So then went out to California for a Halloween party, didn't come back for 4 years, ran into my wife. And then got married. Then comes the next question, buying a house. My wife had inherited a bit of money from her grandfather. And so we used the money to buy a house, a nice one in the suburbs rather than rent in the city. And we lived back in New York City at this point in time. And we mortgaged ourselves up. That, turns out, was also a mistake. Borrowing on a cheap mortgage to buy a house, and by the way, use an investment portfolio, sell it, take a tax hit, invest it for the down payment for the house. Today, well, it turns out my wife and I have already made a different decision, which is we live in our own home here in Florida, and that to me is a very good investment for us, but it's not the best investment. But we've actually just added an apartment in New York City, and that one, surprise, surprise, we're going to rent. Why? Because there are better investments. Houses are not, in my view, sources of saving. Houses are not good investments. And I had all sorts of reasons why I did what I did, taxes, everything else, deductibility, mortgage. But in the end, it was actually a bad investment. And that was the thing. So I then now have a lot of debt. I've now borrowed a lot more from the house, and I have to work. And so I go to work and very traditional, high-paying jobs, thinking, wow, I'm going to get ahead. And by the way, my salary was considerable throughout this whole period of time. And then as I progressed, I even also got the opportunity to have equity. And the result of that for long periods of time was a real difficulty keeping up. Why? Because you move to the suburbs, the expenses go up, you have kid number 1, you have kid number 2, you have 2 cars, you start keeping up with the Joneses, all these different things. And all of those put you farther and farther and farther behind. You have to dig yourself and farther out of a hole. And the thing that's kind of shocking about all of it is I had to work in my situation a very long number of years before I could financially dig myself out of a hole that if today I were able to start over and I took my wife's relatively modest 6-figure inheritance from her grandfather and put it in Bitcoin, I wouldn't have to worry a bit. How about that?
That's a good ending to
Let me
this
just pause
answer.
there and let you take a breath at that thought. Think about all of it. By the way, all of my debt would have been paid off. I didn't pay off these debts until I was well into, I think one of them, my last dollar debt payment was in my low 40s.
Wow.
Wow.
Yeah. So first off, I love that you said, what they called a payphone back then.
Well, I realize I'm speaking to millennials. I need to translate occasionally.
No, we know.
You know everything. You guys, I remember when I was your age and I was much wiser.
No.
I
I love that you said that. So my first thought is kind of like you enter the ladder, so to say, at a certain level, coming
corporate
from
ladder. Almost
no,
like
but
the
just in general, the
yeah.
career ladder, let's say, right, with a certain background and your education, etc. But it feels like I want to use the word trap. Like the trap is the same at every level wherever you get in, right? Because people follow this same path. Like they take on debt and do like study number 1 and study number 2. Then they get a house and then, you get a job, whatever it pays, doesn't really matter because, especially the system in America is of course like, okay, you take on debt to build your credit score, etc. I mean, it took you 15, 16-ish years to pay everything off. And that's actually a thought many people have at the beginning of their careers. Okay, I'm going to save money, then I'm going to invest, etc. But it's kind of like, okay, no, I have to pay off my debt first. Then I can save. Then I have time and space, and then I can invest.
Yeah. And think about how much that debt costs me. Oh my gosh, think how much the debt costs me. I mean, don't even start. First of all, the way we measure it is just wrong. You measure the debt as the after-tax cost of the interest. That's how you think you should measure it. Well, if your alternative is not to have debt and to invest it in Bitcoin, or that's your effective cost of capital.
Yes.
Yeah.
That's a lot.
That's a lot.
Yeah.
So you're paying not 12% after interest. Back then, some of the rates were higher, and particularly on credit cards. Credit cards were like 20% when I was borrowing from them. So 20% after tax. Think about the difference between 20% after tax to call it 40 to 60% pre-tax. That's mind-boggling.
Yeah. I mean, I think you already shared this, but like looking back, you would not advise people to do, to follow the same path. Of course, it brought you to, wherever you got in life and all the different roles you had, right? So, I mean, any path that someone takes gets them to a certain destination. But how do you look back on that now that you can, I think, more consciously look at it? Like when you look back, like when you're in it and you're doing it, I think for most people, similar for me, like you are, just doing what you think you're supposed to be doing or something, like I don't think it's really in a conscious way. How do you look back at that now? And then maybe also combined with what you said before you answered, just the realization of debasement of money and stuff like that. The fact that you can look at it now, how does that make you feel, or how do you look at it?
3 things occur to me. First, Bram, I didn't realize how incredibly stressful it was. When you're in that sort of a hamster wheel, trying to make all those ends meet, and you are trying to earn more and more and more money to pay for everything, the tremendous stress on you psychologically and frankly your health is significant. Secondly, I was blind to the very fact that there was a problem. Meaning, it's one thing to say, I recognize there's a problem and I'm trying to ascertain what the problem was. I actually didn't realize there was a problem. I actually thought I was getting ahead and I thought I was doing everything the right way. Now, to the third part of the question, which you astutely asked, listen, I have been blessed. I've had a wonderful life. I love my life. I love my wife. I love my kids. I even love my dogs. And so I don't second guess that. I'm not second guessing my life or my experiences. I've enjoyed what I've done. What I'm saying is, from the perspective of investing, although not financial advice, from the perspective of millennials thinking about their lives, here are some aspects of my life that were things that, with the benefit of what I know today, I would do differently. That's all I'm trying to say. And I'm not at all convinced that my life would be any worse had I done something non-traditional. For sure. For example, Jeff Bezos was 1 year ahead of me in college, and he started a bookseller, and everybody thought he was crazy.
Yeah.
How's that for an example?
That's a point. I think it's also not about, would your life have been any different? But again, like for me, it's more about this being conscious about what you are doing and like understanding why you are doing something. I'll share this with you, but I've shared this many times on the podcast. But like, I was 30, I had a mortgage, I worked at a bank, I was into Bitcoin, and only when a colleague told me, "Did you know the money in the bank is not yours?" and then explained it to me, like all the stuff in like a lunch for an hour, I felt like an idiot. Like I felt like I was participating in a system that I had no understanding about, and I was with my interest kind of at the forefront of learning about it, but I still didn't understand it, right? And then I realized, okay, but if I am participating in the system that I don't understand, that I'm not a player in the system, I'm like a subject of the system, right? And that was a big moment for me where I just realized, okay, I need to understand that. Maybe that's how I'm wired or something. Like I just wanted to understand it in order to make a more conscious decision as to, do I want to participate in this? And if yes, then how? And if no, then, oh, well, how then? And that's kind of when I moved more towards Bitcoin eventually. But I think the lesson to kind of draw from what you're sharing is like, okay, I did all of this. I ended up somewhere, but when I look back, it's only looking back that's making me realize like what happened and what you were subject to. And I find that very interesting. Like I think you need to experience that, but sharing that with other people, just making that point now on this, outlet that.
Yeah, the red pill is really, really important. I mean, you said earlier, as Bitcoin enthusiasts, sometimes we call it the orange pill, but the red pill in the matrix is crucial. And the fact of the matter is the vast majority of my life, I had taken the blue pill. So I get it. Yeah.
Maybe also because everything went okay. I mean, I have the same here. Like if you live in a rich country and the money just works and whatever, then there's no real need, And I think that's also why it's hard to kind of like force yourself onto the red pill. I think before you can be orange pilled, right? Like it's not a fun exercise to realize, I'm an idiot and participating in the system that I don't really know a lot about, like that's not voluntarily something that you're like going to do.
And think about it, by traditional measures, my life has been extraordinarily successful. And let's go all the way up to the point before I took the orange pill. So all this blue pill period, my life by every measure is tremendously successful. And as I said earlier, I was blessed. So imagine my resistance to taking a red pill, because to me, the blue pill was so obvious.
Yes.
I mean, what are you talking about? I mean, what are you saying?
I'm eating the steak.
Exactly.
That's the matrix. You're eating the steak.
I'm eating Wagyu steak. What's wrong with you? Precisely.
Yeah. I think that's it. It's very comfortable, but I mean, this is, you cannot force this on anyone else, right? So it's more about talking about it, sharing like, okay, this is my experience. This is your experience, and then hopefully that's a touch point for some people. You just mentioned
knowledge is a terrifying thing, honestly. Sometimes,
yes,
you have to get pretty far along in life, unless you're really special. You have to get pretty far along in life to appreciate your own ignorance. You really do. And because when you're starting out, millennials, to me, it's a very rare millennial that has a real appreciation of his or her own ignorance. And unfortunately, some of the boomers I know don't either, but Gen Xers also, they're somewhere in between. Age does do that.
Yeah, that makes sense. Yeah, I wanted to ask you, you just said, okay, I had to pay off the debt, then I had to save to just kind of like survive, have a rainy day fund, whatever. Then the investing came. How do you think about investing? Like, or maybe also when you're looking back, like, was that optional for you? Like, did you have a choice between saving and investing? Like, did you actually work towards a point before you thought like, oh, now I'm going to invest? Or like, how did that go?
Well, first of all, I should say that I wasn't really saving all that much throughout much of that period of time. And what it was the 401k, but my expenses kept galloping ahead. I had very high income, but, the living standards would keep up and often outpace. And more importantly, I lived in New York State, and New York State, and I remember most of my income was wages and salaries and bonuses. And the result of that, of course, is that the taxes are extremely high on that. There's no deferral of any taxes. And so it's very hard to save anything at all, even when you make even when your annual income is quite substantial. The way you start really beginning to accumulate any capital is by saving outside of that and then investing. And by the way, the moment you move from saving to what you're calling investing, good things begin to happen, because you then start thinking like, okay, what's going on around me? What is the environment I'm looking into? And crucially, you have to take responsibility for what you're doing. So many people ask for financial advice from friends or family or whatever, or outsource it to someone, or don't do their own research, or don't ask questions. It is absolutely a mistake. Everyone has to be curious, and particularly about the investment journey. And they don't have to spend their life on it. They don't have to go down a rabbit hole like you and I do. They don't have to do that. But there's so many resources that they could begin to get a bit more educated. So many very good books that get you started, that there's really no excuse.
Yeah. Yeah. So, younger generations like millennials and Gen Z, they are being forced to become investors, which I think is kind of opposed to how you say people should approach it. Again, being curious, being conscious, making sure that you make the decisions that you want to make. Like when you think about, okay, I need to invest, but then you outsource to someone. Yeah. Like, what do they know? Or what information do you need in order for you to agree with, whatever their strategy is. But you see, younger people are being forced to become investors because they cannot save anymore in the currency that they're being forced to use. We just mentioned crypto in the beginning. I think you see a lot of people in crypto that still don't understand what they're doing. That's why they still have short-term outlooks, etc. So for me, it's not really different than doing stocks or whatever, some gambling stuff. If you don't understand why you're doing what you're doing, and what the skills are, or the certain, I think, just skills are that you need to accumulate before you can actually do it yourself, right? That takes some time. But a lot of people are focused on, okay, I need to make money quick, etc. There's not really a long-term outlook. How do you look at that? Also, maybe based on how you looked at it when you were 30-ish. What's the impact on the future outlook on your life when you're forced to do things instead of, making a more conscious decision?
Well, when I was 30, the world was more hospitable than it is for today's 30-year-old. And let me step back and explain what that means. There was not, and my age 30 is 29 years ago. That's a long time. The bias toward assets versus income had not been as pronounced as it is today. It was much easier to be able to buy a house then. And when I say 30 years ago, I'm saying plus or minus a few. There were obviously periods where the rates were a little higher and rates a little lower, but I'm not talking about that. Relative to the annual income of individuals, assets were not as important. It's only in the more recent decades where and we can describe why if we want to go down that, but why ownership of assets has become vastly more important to one's overall well-being vis-a-vis just earning. And so that is a very, very different world that we live in now. And honestly, a far more troubling one if you're age 30, for sure. And it's a real schism, frankly, between people who have assets and people who don't have assets, because often the ones who have assets don't actually understand how challenging and problematic it is. And I think there's a really, very real interesting question, although the real interesting question about why that has come about. From my perspective, millennials today have a much steeper hill to climb, and it worries me a lot. There is a mirage that if you learn about investment, you will be a good investor. In my opinion, in my experience, false. The hardest part of investing, and I think I actually emailed this to you, Bram. I saw a stat yesterday or something on X, which said that although the S&P 500 this year, and this is a day or two old, had generated over 26% or something, and the returns this year the average investor that was tracked by JP Morgan had achieved something like 9.8%.
Yeah,
return.
I have it in front of me. Yeah. It's 9.8.
It was 26.6, but I think the market's cooled a little bit. So call it 25 plus for the year and call it shy of 10% for the average investor, retail investor. That is absolutely depressing. And the reason I say that is because it tells you that even if you know what to invest in and you've done your homework and you've done your research, it doesn't mean you have the intellectual and mental fortitude, willpower to be able to not sell at the worst possible moment and not buy at the worst possible moment and not trade and not churn and do all the things that destroy value. And so it's not just about understanding how to invest. It's about a mental discipline that you have to undertake. And there is no more difficult thing in the world to be able to steel yourself for than to invest in something like Bitcoin or any other sort of high volatility asset. This is an alien creature that is designed to, an alien asset class that drops on top of us and is perfectly attuned to make our species crazy.
Quick question. If you have your Bitcoin in self-custody, where are you keeping your Bitcoin seed words? For me, there's only one way, and that's backing up my seed phrase with stamp seed. It's a single durable plate without any parts or materials. Stamp your words into solid titanium, which is fire-resistant, water-resistant, and built to last. Unlike etching or engraving, stamp seed's patented tools help you to deeply stamp every letter for permanent readability, making it easy for you to protect your generational wealth. Don't risk losing your seed phrase on paper. Get a stamp seed plate for unmatched protection. You can use code BRAM, that's BRAM, for 15% off at stampseed.com.
Easy.
That's why so many people freak out and still don't.
And understandable. They freak out.
Yeah. Well, it's good you referenced that tweet because I was planning on doing the same. It says it's by the Kubesi letter. It said, so retail investors are up 9.8% year to date. At the same time, the S&P 500 is up 26.6, experiencing one of its best years this century. This year's retail performance is the second weakest out of any year where the index recorded a positive return since 2015. Retail investors are also on track for their fourth straight year of underperformance versus the S&P 500. This comes as many individual investors sold their best performing assets during the August pullback, including Nvidia and Tesla. Still, traders are struggling in this market is the last sentence. But yeah, that's exactly the thing, right? I love the example of, anything you do in life is risky, right? The job you pick, the place where it is, or the venture you start or whatever, like everything you do has risk. And so if you're good enough, you get a certain reward for what you do. And then you come home, you want to hang out with your dogs and your wife and your kids. But because the reward that you got is being devalued, definitely like 7 to 9% each year. But I think 7 is like the most common one that people agree to. So when you get home, you have to take more risk to at least mitigate the 7. And then, well, while you're at it and you think you're an investor, you probably want to make more, right? But then, like, you cannot hang out with your wife and your dog and your kids because you have to take on more risk. And I love sharing that because I think it's just a pity, right? Like the whole idea of just taking risk, doing something to the best of your ability, getting a reward from that, and then just saving that and then hanging out with your kids and your dog and your wife. Like that has really changed ever since, well, what you just mentioned also had a ratio between income and the assets that people could buy and the homes, etc. Like it's just not attainable anymore. Plus the currency, the money that we are forced to use is being debased at a faster rate every year, basically. So people are trying to keep up even more than what you described in your time, right? And I think that is just such a pity. And for me, I hope that we can create more touch points around this realization, because I think this is one of the biggest insights I got, at least, that eventually got me into Bitcoin and realizing that by saving in Bitcoin, I can lower my uncertainty, my risk towards the future, and actually do stuff now, like build stuff now and not be a consumer and trying to get rid of this bad money as quickly as possible. And that has given me a lot of less anxiety, but also more rest. Like I am not anxious at all. Sometimes I'm on Reddit in like the millennials subreddit, and I see how people talk and think about their life and their future. And like, should I have a kid or not? Like all these, I don't want to say basic things, but just like logical things that you would do in your life while you're growing up, like starting a family, etc. Like people are kind of like forced to battle their biology because some sort of man-made, bad money system. And I don't know, it's just a little tangent, but I
love that. Actually, you put your finger on really the last lesson that I had today, which is that a lot of people don't realize that doing nothing has risk.
Yeah.
Meaning,
yes.
And you see that so often. In fact, I had a tweet earlier today about this, and there was a sort of interesting reaction to it. But that a lot of people don't realize that not investing or not doing anything or not taking action or status quo is risky. And that is often the biggest risk.
Yeah.
Yeah.
So how do you define risk in like financial terms? How would you define that?
For me, risk is the probability of a bad outcome times the magnitude of that bad outcome and the impact of that outcome on me, which is really magnitude. So it could be I'm willing to put X% of a portfolio against a really speculative meme coin or investment or something like that, or some new technology or a highly priced stock or something. But I know that in my mind, it could go to zero, or it could be, but the only reason I can rationalize it might go to zero is it could be a 10x. So I'm willing to take the risk of zero in exchange for 10x. But also it can be other kinds of things that to me have no bad asymmetries. One is this, to me, buying bonds. I don't buy bonds. It's just not my thing. And the reason is because the asymmetry of it doesn't make sense for me, meaning the probability that they go to zero in fiat terms is zero or near zero. But the probability of the upside to me is de minimis, and in fact, highly, highly limited. So they have tremendous risk, which is ironic. I know that's a strange way to think about it, but that's really the way to think about it, because not gaining relative wealth is a risk when the when the absolute level of wealth is rising. And that's a point you made earlier and is a key point.
I think it's great you're touching on this, because not doing anything is probably the most risky thing to do.
It's
and
often
I think
the worst decision.
Yeah. But a lot of people seem to forget this when they, and I think especially the last weeks, I don't know why, like all the fudsters around MicroStrategy, Bitcoin, etc.
Oh yeah, we're going to talk.
Some people,
we'll get to that in a minute.
Yeah. But some people still call Bitcoin tulip bubble, Ponzi, whatever. And then I wonder so many times, like, do you fail to realize that what you are in, the money system you're in, is on a perpetual downward slope, and it's accelerating, the debasement is accelerating. Like, you have a problem. It's not that you do not have a problem, right? You have a huge, huge, huge problem, and you have to do something with it. From my point of view, after studying this for a long time, my best option is Bitcoin. And I will add to that, I'm a very risk averse person. And for me, I feel like Bitcoin is the least riskiest thing that I can use to, lower my future uncertainty and keep and grow my wealth. And when people are like bashing it and saying like Ponzi, whatever, I just think like you cannot say that without also saying, well, I know I'm in a real predicament, but Bitcoin is still a Ponzi, like that changes the whole conversation, of course. But a lot of people don't want to mention that. I don't know. Maybe that's part of the red pill. But
we haven't even talked about the greatest risk of not doing anything. And this is, I would say, far more problematic for millennials and Gen Z than Gen X and boomers. And it's by virtue of age, which is millennials and Gen Z fundamentally do not, in my experience, limited. It's a rare one that appreciates the importance of time. time is the one resource we're not getting back. There's some ways we can extend it through health and other things, but status quo means you're letting time drift away. And that's so powerful because when you think about it, when you get older, you can look back and you say, and when we're having this conversation, right? Tad's woulda, coulda, shoulda stuff. Right? That's what the Tad's woulda, coulda, shoulda.
Good title.
Right. It's woulda, coulda, shoulda. And the irony of it is it only occurs to me because compared to you, in all statistical likelihood, I have run out of time. I'm not getting it back. You have far more time statistically than I do. And the Gen Zs that listen to this have even more time than they do statistically. And by the way, life expectancy, far more time even than that. But what's crucial is that time, more than financial resources, more than anything in the world, is the one resource that is going away. And every time you do nothing, you're spending your time freely, by the way, almost wantonly, almost gluttonously spending your time.
I love that you mentioned this because this is one of my main topics, like time and energy, limited time and energy that you expend to get a reward that can be infinitely created. It's probably the dumbest trade that you could ever.
It's the dumbest trade in the world. You're exactly right, Brad.
Well, we're still doing it. We are not. Maybe we are more into Bitcoin. I wanted to jump into Bitcoin, but I first wanted to ask you about, what did you learn about investing? And also, I mentioned you were the head of Sotheby's. Of course, you saw art and other luxury assets, watches, cars, whiskey. I don't know what people all buy nowadays because I'm just looking at Bitcoin. But what did you learn from that? Do you think these like art and luxury assets are good investments? Yeah. How do you look at that now?
Okay. So, I spent a lot of time then, and I actually spend time now because I'm also chairman of the largest art advisory firm called the Fine Art Group, which is based in London. And, so we spend a lot of time thinking about art as an investment. And art is, I'll do art first. I'm also a collector of fine wines and whiskeys. So I think about that also. And we have other things as well, but those are the things I would say. And certainly at Sotheby's, we looked at other kinds of things as well, but let's zero in on those two. And then I think we should pivot to luxury real estate as well. With respect to art, fundamentally wins out of the gate over even Bitcoin. And I'm going to tell you, this is going to be highly controversial. So hang on to buckle your seatbelt. And the reason is because it's really easy for me to love a piece of art, and it's very difficult for me to love Bitcoin. It's just, one appeals to me. It speaks to me as a human being. It speaks to me as an art appreciator. And so at that moment, for all time, it's beaten Bitcoin. Now, if I go into buying art with the prospect that it will outperform the returns of Bitcoin, well, it will certainly be less volatile than Bitcoin, but I don't believe it will outperform the returns of Bitcoin. Now, maybe some kinds of art, I think ordinals and some other things, NFTs potentially as well, digital and generative art could outperform Bitcoin for periods of time, and maybe even longer periods of time. But that's a financial trade. And the reason I say that is because art is fundamentally nourishing in a way that a financial trade, which Bitcoin isn't. And so from my perspective, I'm prepared to accept less volatility and also prepared to accept that because I love it. Now, if I'm buying art and storing it away and not doing something with it, that's a different thing. That looks more like a financial trade. Or I'm just a collector. I really love it and I need to have it. And I want to own it. I think there's something valuable, or I think I can contribute to it, or I'm performing a fiduciary service for humanity, housing and protecting some treasure. That's a different story, but none of those is a financial trade. So the area where I have a real problem, Bram, is wine and whiskey. And what do you mean? It's possible that, and in fact, I do. I happen to love wine. And by the way, I happen to love whiskey. I don't drink them very much anymore. I drank more some time ago, but I don't drink them as much as I used to. And I drink beautiful ones, but I'll never drink the ones I have, not in 1,000 years. I'm blessed to have wonderful friends, but I don't have enough of them that could help me drink all the wines that I have and all the whiskeys that I have. I couldn't give them away. So why am I holding them? Why don't I sell them and invest in a Bitcoin or something else? And that is a question that I struggle with, even though I know that time is slipping away. And every day that I let that slip away, I'm even farther and farther from a financially astute decision. So what is it about me that just can't break that? I don't know what it is, honestly. I don't.
I love that. I think I actually fully agree with everything you said. I mean, if you buy art because you love it, then yeah, do whatever. Or
Then it's always the best investment.
Of course. No, so I 100% agree with that. But I think,
and by the way, if you buy Bitcoin because you love it, you're weird. Let's just say it, Bram. We can say that.
I buy Bitcoin because I love my life. No.
Okay. Well, buying Bitcoin because you love your life and you want financial liberation or something else. Okay, fine. You have me a hello.
Yeah, I'm not looking at my
wallet.
No. I'm not looking at my wallet.
By the way, when you post this, let's see how many people are going to come on with comments and say, you're out of your mind. I buy Bitcoin because I love it. No.
Well, it ties back to what we said in the beginning, like, and it's funny that you allude to it with the whiskey and the wine. Like, why are you doing what you're doing? I think that is more what it's about, right? Because if you think, for example, I had a couple of watches that I wanted to sell, and I bought them with the idea, well, I can always quickly sell them. I learned that the hard way. And I also love looking at them and wearing them sometimes. So it's like 50-50.
That's wearable art.
Yes. But that's what watch lovers say.
Yeah. But by the way, have fun staying poor with wearable art.
Exactly. Because I was like 50-50 on it, right? So because I always had in my head, wow, I can sell them. And at one point I was like, and we're going to talk about this, I was like, I just want to sell them all and just buy MicroStrategy. What a pain in the ass to sell watches.
Transaction costs are crazy. They're crazy, and you'll very unlikely to get what you paid. Oh, it's a total nightmare.
Yeah, no, it's a disaster. I got like lowballed by all these dealers. I was like, no, F this shit. So
yeah,
I didn't 100%. Do it. But my point is, if you just have a watch or a car or an art piece that you love and you just never want to sell because you love using it or looking at it or whatever, then it doesn't really matter what it costs, right? Whatever it costs for you, you
exactly.
If your idea is this is an investment, then your whole list of criteria in order to judge it has to change, I'd say.
Yes.
And then I personally don't really understand art from an investment point of view. I think it's fascinating that there's apparently enough people, there's a big enough market to exist. But I cannot imagine like everyone who's buying art at, big auction houses, etc., is in it for the love of just the art. Maybe you can prove me wrong, but I feel like it's still an investment play in a sense. Or am I totally wrong?
No. You're not. Well, there's nuance to what you say.
There's so little people. Sorry, one more thing.
Yeah, go ahead.
You have a 68 Mustang Cobra, blah, 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 right? Okay, you pay, I don't know, I'm just going to say $1 million, whatever. Like, I don't even know the price, but like a sick
nice
example.
car, by the way. It's a good choice.
It's a cool car. Okay, let's say you pay $1 million. Like, realistically, how many people in the world are there that would value it at the same price point, have the money to buy it, and then like have a plan for it? Like, I feel the pool is so small, right? When you think about it as an investment, like if you have a beachfront Malibu home, I think that, by the way, that's similar. But probably like just a general home somewhere has a bigger pool of possible buyers when you think about it, like buying it as an investment and selling it later than something like that. And so for me, that has never, I don't have $1 million to buy a Cobra, but like I never understood it really because the pool of people is just so small.
Yeah. So it is true that the percentage of individuals that can afford that is small. Percentage is small. But the percentage, however small, is times 8 billion people. And suddenly you're getting a lot of people. And moreover, with wealth, and particularly when you get into the upper echelons of the wealthy and the super wealthy, suddenly there is a power law in effect, which is that every 10 times in wealth, you get 1/10 the number of people that can do it. But crucially, as that gets more and more and more, you find there are a large number of people, and I'm talking many thousands of people, that honestly, Bram, can afford anything. By the way, not anything with a modifier. I mean, anything, period. And here's another thing. If you can afford anything, the relative value of your money versus a beautiful piece of art, versus a beautiful car, versus an interesting piece of jewelry with a marvelous story behind it is near zero. Think about the diminishing returns. What's interesting is what the things that speak to you, the things that are a part of your narrative, the narrative you're joining when you have a beautiful art collection is completely different if you can afford anything. And that's a really crucial insight. And while you're right, the percentage of people that can do that is very, very low. The truth is that is a large number of people. It's many thousands, and they're all over the world. And guess what? The value of money to them diminishes as they get more and more of it. They would like to put it in something else. It's a lifestyle expense.
Exactly. Yeah.
Now, at the same time, back to your question, people don't like to make very large purchases without some confidence that there will be a resale market. And this is an important insight because think about the behavioral economics of this. If I'm going to spend $20 million on a piece of art, by the way, $20 million buys a beautiful piece of art, just to be for the record, world-class, famous piece of art. It'll have a fantastic narrative. It's a gorgeous piece of art. If someone's going to spend $20 million on a piece of art and they think, listen, suppose they're a billionaire, suppose they can afford it. Suppose they can afford it going to zero. Doesn't mean they want to make that decision and say, I'm accepting it to go to zero. That's an important point. Meaning, think about if I'm spending $20 million and lighting the canvas on fire, it's going to zero with no insurance, going to zero. What does that say about me as the person who did that? It says all sorts of things that are really genuinely unflattering. The reason I point that out is because let's go back to your question. How can the auction houses and frankly the worldwide dealers, the auction houses actually have a minority of the world's $65 billion art market? How can all those people be spending all that money and not thinking of it as an investment, at least partly? And the answer could well be some are thinking of it as investment. The vast majority of people are making a lifestyle decision. They're buying the art because they love it. And at the same time, they're wanting confidence that what they're buying has value. One, because they don't want to be getting fleeced. Nobody wants to get fleeced. And by the way, when you're paying $20 million, you really don't want to get fleeced. And number two, it's because they think there is value in it. And paradoxically, you have even here a Veblen good. What do I mean? Sometimes it's more fun to spend $30 million on the same piece that you fought, which started in the auction house at 20, and you pay 30 for it rather than 20. Why? Because you can. And because you fought for it. And because other people helped give you price transparency in the auction house by bidding against you. And because it was part of a story that you're weaving about the piece. These aren't investment decisions per se, but the investment aspect of it reifies the story, the sense of self, the positive personal narrative, the understanding, the connection between the collector and the piece of art.
Interesting. I had to think of Justin's son.
Yeah.
He ate the
guy
banana.
Who ate the banana for $6 million.
Yeah. I don't know what to think of that, to be honest.
He's a guy who has a lot of money. And guess
you got to do what you got to do.
He traded it for a lot more fame than he already had. He had a lot to begin with.
Yeah, that's true.
But by the way, I guarantee you he has more now. He's actually mimetic now. He wasn't as much initially. So he's become a story. He's become a meme.
Exactly. Well, I think that is interesting, right? Like, I don't know how you can put a $6 million price tag on that. There's probably an analysis to be made there, but might be a good price and reward for what he did there.
Yeah. Well, in terms of the publicity, he got far more fame out of it than a $6 million ad bot.
Yeah, exactly. So maybe
yeah,
that
who
works.
knows?
Yeah, I want to move to Bitcoin, obviously.
Sure.
And we I had to think of a tweet that I put out last week while we were talking now. And I said, I just had this realization, and I wonder what you think. I said, who is going to invest like $500 a month at 7% for 35 years, right? Like that's always like,
I love that. By the way, I saw that tweet. I thought it was great.
Like, is that even realistic? Like, who does that? Has anyone ever done it? Has anyone ever went to like the end of the line and be like, well, now I have $3.5 million in my something, my brokerage account. So I don't even know. But the point that I made was like, doesn't every generation have like a thing, right? Like the boomers had real estate, Gen X got like the S&P 500, riding NASDAQ, like riding all that stuff up. And I think millennials and Gen Z also, in my opinion, like they get to Bitcoin. Of course, we're talking about your generation. You are into Bitcoin, and like where does Bitcoin come in for you when we're talking about savings, investment, etc.?
So the first part I want to say is just comment on the question you asked in your tweet, which is in the early part of the mid to sort of upper 60s of the 20th century. Remember, and frankly, also in your country, Bram, and many European countries, remember that the very concept was pension payments, defined contribution payments. So defined contribution payments aren't exactly like dollar cost averaging, but they are very similar, which is each month you'd work and you would get a contribution to your pension. And so in effect, although it wasn't exactly what you said, it rhymed. Meaning you would have and then at the end of that, and by the way, even among the civil service employees today, they get contributions along the way and they earn credits. The military have arranged these things and they actually do. So there are lots of examples of it, but it doesn't go to the question you really asked, which is the behavior of automatically putting $500. But actually, a lot of people do have 1K contributions that are automatic straight out of their paycheck. The degree to which it's automatic makes it more reasonable and more likely that it happen. The second question that you asked is also very interesting, which is, how do I think about Bitcoin? And the difference between me and a millennial, imagine you've got a millennial and me in exactly the same financial situation. I have to think about time more than the millennial, everything else being equal, because I have less. And so the probability that I'm going to need cash during a volatile period of Bitcoin when it's crashing or something like that is higher than a millennial, everything else being equal at the same financial status, because they just have a lot more time. And so what that means is that everything else being equal, and of course, everything may not be equal, but everything else being equal, one would expect someone who's older to have a higher cash position to meet a rainy day. And moreover, they would also expect that individual to have a lower percentage of their portfolio in Bitcoin. Now, the crucial aspect is this. What one needs to think about is, if I need a rainy day, how much cash do I actually need? And how realistic am I being about a rainy day? One of the things that Michael Saylor says frequently, by the way, is the very, very wealthy keep very, very little cash on hand because it's not a good instrument. It's not a good investment. And he's not wrong, but he qualifies it very thoughtfully by saying it's the very, very wealthy who do that. People who actually have to use working capital, people who need cash, people who are concerned about a rainy day fund, they need to have a higher proportion. But for millennials that don't have near-term needs for cash, have long-term investment horizons, and this is not financial advice, as I said, they can assume everything else being equal, more risk.
But how did you get into it? Also with your background of the wine and the whiskey and the other investments, like what made you get to Bitcoin?
Well, a lot of people think that that's a crazy pivot, but what if I told you it's actually completely logical? And you're going to say, what? Explain more. Because I spent nearly 5 years selling tens of billions of dollars worth of stuff that did not produce cash flow. Right. Think about that for just a minute. Some of the world's greatest treasures do not produce cash flow. In fact,
shocker.
Yeah, shocker. They don't produce cash flow. So the very idea that you need to have that things, and by the way, before that, I was the chief executive of Madison Square Garden, and the value of the Knicks and the Rangers, both great teams in New York City, far exceeds the cash flow that they produce. In other words, you look at that and you say, oh, and by the way, let's step back and look at the brand of Sotheby's. Sotheby's brand is a famous brand that is far more valuable than the cash flow that it has historically produced. Why is this important? What this means is it's not a long stretch for me to see that a piece of code could have value, even if it doesn't produce cash flow, because I've seen it rhyme 100 times.
Yeah.
So for me, prospective Bitcoin in my case, or my crypto investments, I'm a partner at One Roundtable Partners and 10T Holdings. The notion that the combination of adoption of an increasingly viral technology platform with a piece of code representing money or versions of digital money or digital capital, however you want to call it, to me is every bit as clear and present as a $20 million Picasso, because what's a $20 million Picasso? It's a frame, it's some paint, and it's a piece of canvas. Why should it be 20 million? Because someone says it is.
Yeah.
Someone's willing to pay it.
I love the quote of like, the market is the market is the market.
The market is the market is the market. And you could say, well, gee, it's a Ponzi scheme. Well, hang on. I mean, aren't we arguing literally right now as we're about to go from 24 to 25 about PE ratios of the Magnificent Seven? The most valuable 7 companies in the whole world, and we are absolutely tearing our hair out saying they're wildly overvalued, et cetera, et cetera, et cetera. The very conversation of price discovery that we're having about things that produce insane amounts of cash flow, many of which, by the way, don't even offer a dividend. We seem to have a sort of brain block when we talk about things that are not producing cash flow and whether they have value, and they're actually tech things like a piece of code.
Yeah. Well, I think that comes back to what you mentioned in the beginning. Yeah, never learning about what is money. I think the use case, when people say like, what's the value of Bitcoin? What's the use case? Well, the use case is I want to keep my money.
Yeah, well, use case is you want to keep your money. By the way, I don't see a lot of people in Argentina and Nigeria and Africa and all these places. They're not asking about use cases. I see a lot of people, on really nice, fashionable boulevards in Europe and America is talking about that.
Yeah. But where I wanted to go is like the use case of money is huge. 1, 2, also very confrontational, I think, right? That we talked about before. Is this better than gold? Is this better than money? Whereas, when you talk about stocks and valuation and dividend, blah, blah, like, I think in general, more people have learned, I'm doing air quotes, have learned about that versus what is money? Why is the money that I'm using very bad? Why do I need other money? Like that is just a bigger journey, and I think has a far bigger impact on the world. That's why it's hard to understand. That's also, I think, what people compare Bitcoin to growth stocks and stocks in general, etc. Yeah. But I think what you're also alluding to is like, well, you can discuss PE ratios, whatever. But if I think Apple is more valuable than Nvidia, I'm gonna vote with my money and I'm gonna buy Apple stock.
Apple, everything else being equal, will go up.
I mean, that's a very human thing to do. So
Exactly.
It's funny because it feels like...
By the way, that's so true. It's a very human thing to do, bro. That's fundamentally important.
It's funny because now I want to say, but it feels like an intellectual circle jerk when they're like, oh, but the PE should be like that. Well, but the market is the market is the market. They're showing you what they value more, right? Like I think it's very simple. Like you don't have to make it more difficult than it is, or maybe... Yeah.
Imagine all of the layers and layers and layers of cost and effort and time and analysis and everything to create that intellectual construct.
Yeah, exactly. Yeah. Where you could just accept what it is.
You could just say, that's the price. That's what everyone says the price is.
Well, that ties into my next question. Like, how has your perception of traditional finance changed since, studying Bitcoin, getting into Bitcoin, and kind of seeing these two, I want to say, worlds or paradigms crash?
And orange pilling my relatives too, by the way. That's a key point. Well, let's go back to the numbers that you just shared 20 minutes ago. Year-to-date retail investors, did you say 9.85% according to JP Morgan? Yeah. Year-to-date, as of whenever that date was, which was a couple of days ago, the S&P 500, which, let me just go back to the S&P 500, is really the benchmark for the equity index. It's the worldwide benchmark. Was 26 and change, 26.6 or something. I've forgotten what the number was. If that doesn't tell you how absolutely urgent and how serious the problem is, I don't know what does. By the way, and didn't you also go on to say in that tweet you quoted that it's one of the most significantly up years in the history of the S&P 500?
Yeah. No, one of the best. Yeah.
One of the best years in the history of the S&P 500. And surprise, surprise, the average retail investor at the largest and most important bank in the world only earned less than half of the return of that. What kind of an indictment is that on the traditional finance mindset?
I want to say rigged game, but...
Well, rigged implies intention.
Well,
and the intention to me is,
Good
that's
point.
a little hard. You and I can debate the intention. I think you can assume the best of intentions of everybody and still get to a game that you don't want to play.
Yeah, I'm saying rigged. I don't think like in a malicious way, but it's like, I always use this example. There's this, you have these like flow traders, right? They have like their own satellite, so they have faster internet, so they can execute orders quicker. Like, you're in the same boat with them as a retail investor. That's what I mean with rigged game. Like, it's a game, but you as just a hardworking general person that, again, takes risk, gets a reward, and you come home, like you're playing the same game as those people that are playing that game as their job the entire day and have tools at their disposal or certain tech that gives them edges over you, right? As just a general retail investor. That's more what I mean with rigged.
But let's go back to that tweet for just a minute, because there was something else you said in there, which is part of the problem is that people going into the month of August had Tesla and had NVIDIA, and they sold it. Right. Meaning in July, they had the tools to hit that 26%, if I just use those two stocks as an example.
Yeah.
And then they sold them. That didn't have anything to do with high-frequency trading. It didn't have anything to do with Citadel. It didn't have anything to do with anything. What that had to do with us, retail investors. And so what that tells me is the mission you are on is crucially important, because what you're trying to do is change perspective, change behavior, educate people, and avoid their doing themselves harm. And guess what? That tweet is people harming themselves.
Yeah, I agree. Thanks for sharing that. But yeah, I agree. Like it would be way better if you can.
It's not some boogeyman. It's not some bad rigged system. That was people harming themselves.
But if you don't know, if you are not aware of the fact that you're not consciously playing this game, that's also when you make wrong decision. I think that ties back to in the beginning. Like, okay,
I agree with you on that.
So that's what I mean. Like, it's a pity. It's a bit sad in that sense that you are forced to play this game that you don't really understand why. You play a game that other people play that just do that as their job the whole day. So you're battling against some, bigger thing that you can probably never beat. But you feel like you're getting ahead, as you said, about your own journey. Also, like probably people feel like, oh, wow, I made 9%. I made 9% this year. And then JP Morgan comes out and says, well, you grossly underperformed with 9%.
Yeah. If you just put it in the S&P 500, far better.
So another investment I saw you talk about is MicroStrategy. I think a lot of people are fascinated by...
that was the November 5th podcast, right? I think I said at the time I liked the stock.
Yeah, you like the stock. Well, what is... I'm just asking the same question to everyone. Like, what is your explanation of what Michael Saylor is doing, and why do you find it interesting?
So my explanation for what Michael Saylor is doing is he is providing a gateway for large pools, meaning multi-trillion-dollar pools of capital that have otherwise relatively modest and not particularly exciting opportunities for returns, to be able to enjoy the potential returns of Bitcoin. And he's doing it at mass scale, multi-billion dollars per week scale. And that is, to me, one of the most startling financial innovations. And that's why everybody's talking about it. And by the way, if you listen to him, he didn't just come up with this idea in August of 2020. This was when he first decided to invest in Bitcoin. This is the furthest. I mean, just listen to any of his. If you listen to the narrative of his podcast over time, what you see is
it changes. Yeah.
He's changed multiple times. He's innovating as he goes along. He's sort of improvising in a very powerful way. And he's discovered, oh my gosh, look at all this pool of convertible debt. And what can I do with this? And how do I think about maybe I could get, a lower interest rate because I'm trying to, I only have $75 million of EBITDA or whatever it is to work with. And I want to reduce my rate so I can buy more Bitcoin. How do I do this? But you know what? They actually are kind of keen to get a conversion. They really, and that is incredibly innovative, incredibly controversial, incredibly counter to the received notion of the way things are done. And that's what he's doing. And guess what? He's making waves for a reason.
Yeah. Yeah, one of the biggest things that made me see this too is when I heard Ben Workman on a podcast. He's like a MicroStrategy analyst. He has really good analysis. And at one point he mentioned, this is a business model pivot. And I started to think about that. Like, yeah, that it makes a lot of sense, right? Like first he bought Bitcoin to see if he could kind of like save his company or give it some sort of future. And I think, as you just mentioned, then at one point, and I think when we talk about the market is a market, apparently a company with Bitcoin in its treasury is very interesting. And I think Michael Saylor discovered that himself by the market telling him,
He discovered how valuable volatility was.
Yeah.
That's what he discovered. He's about to discover what you just said, in my opinion. When I say about to, I'm guessing, which is he's going to discover what you can do when you have a massive, massive asset like Bitcoin.
Yeah.
At the moment, he's still in acquisition mode. Yeah. By the way, and we don't know where he's going. I'm not even sure he knows where he's going. And I don't mean that as a knock. I mean, he's improvising. When you're improvising and innovating, sometimes you're not sure where you're headed to the horizon. You just don't see it yet. But you and I know what we would be doing if we sat on 500,000 units of Bitcoin, 500,000 Bitcoins. Think about that. We know what we would do with a multi-billion-dollar portfolio of Bitcoin. And we know what we would do if SAB 121 is repealed in the United States and you have a safe custodian at that level of scale or selling call options. There are ways that people who aren't thinking about it as sort of over the horizon as you and I are now aren't seeing, oh my gosh, you can actually produce cash flow from this Bitcoin.
Yeah.
And potentially a lot.
Makes a lot of sense, right? I think that's what Saylor's doing. That's how he talks about it, right? Okay, this is Manhattan in cyberspace. I know I need to have a part of it. I don't know, just like the people earlier in Manhattan didn't know that this was going to be the center of the world to some degree, but if you secured your spot, then you definitely could capitalize on that. And that's where he's going. And I feel like, what he's doing is like temporary, 10 plus years temporary, maybe not even, depends on how fast Bitcoin, conquers the world. But I think eventually he will get to a point where, just as you said, he has a big stack and he's going to build products and services on top of that and just become like a global Bitcoin bank. I mean, if you have assets that are valued, then you can make a business model on it. Like that makes a lot of sense. And you don't necessarily have to know what you're exactly going to do.
And one of the things that really strikes me on this topic is a lot of people talk about MicroStrategy is highly leveraged, et cetera, et cetera. Last I checked was a couple days ago. I think Jeff Walton or somebody who tracks this says the leverage ratio at the moment is 16%, 1/6. That's really not very leveraged. The second thing is, and this is a fascinating conversation that James Check had with Jeff Walton in the same podcast again 2 days ago. And what they said, which I thought was really smart, is as Bitcoin crashes and so-called MicroStrategy begins to come under pressure, what paradoxically is happening there is the volatility is rising. As the volatility is rising, the value of the call options that you can write on your underlying Bitcoin go up. The strike price will go down, of course, because the value of the Bitcoin is crashing. But the relative volatility will rise as the amplitude of the wave of volatility on it gets stronger and stronger. So the notion, setting aside the possibility of lending out Bitcoin or anything like that, or the possibility that he can pivot again and create cash flow right at the time when people are concerned that he won't be able to repay his debts, or however small they are, because the Bitcoin crashes, is precisely the opposite of what is very possible to happen.
I mean, just this, and I learned this, well, this is my lesson for myself from getting into Bitcoin. Literally what you just said and me laughing makes me think of this. If you think this is interesting, you need to get a seat. This is what I learned. I saw a tweet, I don't know, probably like 7 years ago or something. Someone tweeted about Bitcoin, like Bitcoin is either zero or everything. And I always looked at it like that. Like it's still an experiment. There's no middle way, in my opinion. So he said, if you think Bitcoin is not going to zero, then you think it's going to be everything, like the black hole value, however you want to call it. You need to get a seat in the stadium, because then you can watch this all unfold, and then it will also be entertaining, he said. And that's literally how I feel about Bitcoin. Just trying to participate in this, sharing about this, seeing this unfold. It's just really entertaining. And what you just said about MicroStrategy, I have the same feeling. It's like this is going to be like a really bad blowout, which I don't think it'll be, or this will be what we are kind of like talking about. And that would be super entertaining to be a part of and seeing that unfold. So for me, that's a big part of my investment thesis in MicroStrategy, is like, I just want to see what's happening here. So
as Teddy Roosevelt said, you want to be the man in the arena.
Exactly.
Not sitting in the seats. And you know what? That's exactly right, because of course, any investment in the world under the right circumstances, or very often the wrong circumstances, can go to zero. There's nothing different about MicroStrategy. It can go to zero. And by the way, it could go to zero tomorrow. And so what you have to think about, as I try to think about, is how much MicroStrategy am I willing to invest in, given the asymmetric upside that I see versus the possibility tomorrow it's going to zero. And that fluctuates, and it's a complicated question. And so that's where I am. But I'll tell you one thing. It certainly feels sometimes hard, but most of the time worthwhile to be the man in the arena. It's just better.
I love it. I want to wrap up with a few short questions, although maybe this question might have a long answer. But I love that you in the beginning shared about, would you still go to college, go into debt, etc. Just a different view for younger people, also towards the future, for them also what to do career-wise, etc. I recently had a episode with Jeff Booth where we talked about like AI and productivity in the future. And I have a young son, a young family, and I'm thinking like, wow, like his future is just totally unpredictable for me to help him prepare, like with AI and all this stuff. Just totally different than what I experienced in my youth or what you experienced when you were younger. How do you think about the future of AI? Like, what does it mean to you? And do you see an intersection with Bitcoin?
So let me separate the two questions. About as confident as I can be, given we're talking about the future and no one knows, but for my 2 cents, that it won't be long before computers can do pretty much any task that is intellectual better, faster, and more reliably than human beings. When I say pretty long, I'm talking a matter of a few years, and I'm not talking 10 and 15. I'm talking under 10. Mm-hmm. And maybe 5. I think robots are a little bit behind that, but not a lot behind that with physical tasks. So the answer to that is, what does that mean? What it means is that you and I had a sort of framework, I particularly, you less so, that the purpose of an education was to get in the job, get a good job, get a high income, save some money, have a house, get married, whatever, and bring up kids and have a family or whatever your version of your life was. But the key point of the education was to go through some sort of sorting process to try to get the skills necessary to get outsized rewards in the work environment. That's really what it was. Well, good luck with that now. And that can be a scary thing. Or you can take a different tack, which is to say, oh my gosh, my son, in your case, and my son in my case, and my daughter in my case, they are liberated from that. Now, they're going to have to figure out how to earn an income. And by the way, I suspect that we as a society are going to have to figure out how to do it long before they have to figure out how to do it, because it's not like we're going to suddenly wake up and decide that everybody has no income. That's just not going to happen. So we know that can't happen. We're not sure how to do it yet. And we also know that as a societal problem, we're not going to just wake up one day and decide nobody has any purpose anymore, because that's not going to work either. And I guarantee you, anybody in democracies in particular, anybody that wants to take the position that nobody has any purpose and nobody has any job, they're going to be out of a job and they're going to have no purpose, and really fast. So you look at that and you say, the question is going to be an embarrassment of riches, which is, how does a human being's life have meaning in a world surrounded by alien forms of intelligence? And I believe that canvas, to use an art term, hasn't yet been painted on sufficiently, and it can be a very beautiful picture. It's not certain to be a very beautiful picture, but if you ask me, I think there's an 85 or 80% chance it's going to be a very beautiful picture, a 15% chance that I'm a little concerned about, and a 5% chance that I'm terrified. But let me tell you something else. When I started out, as a kid who couldn't afford school and didn't know how he was going to pay for it and didn't qualify for financial aid, and grew up in the suburbs of Denver back when it was a small city with my mom, I wouldn't say that I had an 80% shot of it coming out beautifully.
I love that. Thank you. I think that's a great outlook that I share with you. I see it more positive than negative, but very, very unknown. I think this is one of the biggest things that any human has probably experienced. So, ever. Yeah, no, I agree.
This is bigger than fire.
Yeah. Well, and I love on this podcast, I talk a lot about more like the spiritual and philosophical side also of Bitcoin, or how a better money could change the world. And I feel this could be a very spiritual thing, actually. You know, like the question that you said, like, how does the life have value? I think, and actually what you said, like, you asked the question because we get to this point because maybe most of the people won't have a job, which is funny because, like, why would we make our lives valuable by having a job? You know, like this. So I don't know. I think that's just an interesting. Maybe that's for a next time to chat about. But I think that's just an interesting thought, right? Like, why do we end up there?
Purpose, yes. Job, maybe not.
Yes.
Purpose, yes.
Better word.
Job,
yes.
maybe not. And crucially, that might be liberating in the following sense, because think about it, for millions of years, the work that we did gave us purpose. Now we're going to have work that we want to do, not because we have to do the work, it's because the work gives us purpose.
Yes. Which is probably a very liberating thing. All right. I want to ask you my last question, because I ask everyone the same question, which is, what is a core belief that you will never let go?
Core belief that I will never let go. That time is the most precious resource in the world. And sometime in my life, I've had to get reminded of it, often, with a health crisis or something. And that every single moment is a blessing and we should cherish them. And too often I, in my own life, have frivolously tossed them or gluttonously ignored them or something else. But that is a core belief that I regrettably have had to be reminded of it too often in my life, but it's core.
Awesome, man. Well, thanks so much for sharing, and thanks so much for this conversation. I really enjoyed it. And maybe next time we can dive into the AI stuff.
I've enjoyed it.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, Please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for our next episode.